Thank you for coming. I will be making forward-looking statement during this presentation. I would like to start with a definition. This is a question I've been asked a lot in the booth. What is exactly a royalty? A royalty is a right to receive payment based on a percentage of the minerals produced at a mine. In our case, payments are made in gold, physical gold, silver, or diamond. Some of the highlights of Osisko Gold Royalties is that we have a unique business model that delivers strong cash flow. Also, financial interest in multiple exploration properties. We have a large and diversified asset base in low-risk jurisdiction, mainly North America. A strong balance sheet to fund growth with $800 million in available credit. We focus on returning value to shareholders with dividend and stock repurchase, and an experienced and proven management team. Osisko Gold Royalties is a 5-year-old company. We started 5 years ago with 4 royalties, 1 cash flowing assets, and $500 million market cap company. 5 years later, a portfolio of 17 cash flowing assets, over 135 royalties, and 1.8 billion market cap. We've been through 2 major acquisitions, and we have created what we call our accelerator business model. This year, in summary, the latest is the acquisition of Barkerville Gold Mines for the Caribou Gold deposit. Eagle Mine started producing, and we consolidated some of the stream we had in our portfolio as well. We did a huge share buyback from Orion Mine Finance, and we repurchased lots of the share in the market as well. This is show that we are in safe jurisdiction. Most of our assets are in North America. The blue one are the main assets, the cornerstone assets, all located in Canada and one in Chile. Canadian Malartic is one of our biggest assets. We have a 5% NSR on that gold mines. Renard and Eleanor are mines based in Quebec. And Eagle is the latest that started producing in Yukon. Compared to the other royalty company, we are the lowest risk portfolio with most of our assets in Canada and North America. This shows the growth production since inception of the company. We started in 2014 with 1 cash flowing assets, gold and silver from Canadian Malartic. We grow a portfolio of last year up to 8,000 ounces of gold at 89% cash operating margin. It was a pretty high margin for a royalty company. And we continue to deliver growth for this year. Same slides, but based on compound annual growth rate of 41%, continuing. The cornerstone asset I mentioned, Malartic, last year they produced close to 700,000 ounces of gold, and we received 5% of that. Still have 12 years mine life ahead of them, and going through expansion, and we still have royalties on those expansion as well. This is a chart of our strategy where we like to do our investment. You can see the Lassonde curve based on exploration and until producing. We like to do investment in exploration company, early money in. That's where we can get good value. Also, we do deals at the development stage, like Eagle and Caribou, kind of last money in just before construction. This is what we can bring to the table. Our expertise, what we call our accelerator model. We have experience in exploration, engineer, construction, financing to help advance those projects. The example are Osisko Mining, Barkerville, Osisko Metal, Falco Resource. Barkerville is a little bit different. We took over the entire company in September. We're going to put it in a private company attract financial partners to help develop the project, and eventually spin out the deposit and retain only a royalty. This is an example of other transactions we've made in the market. The Hermosa NSR was acquired in 2016, and we took equity position in the company as well. 2 years later, we made a net profit of $34 million on our investment, and we kept the 1% NSR. It is now developed by South32, an Australian producer. Windfall, kind of the same example, initial investment in equity, and a 1% NSR, and still doing investment in that company and have the NSR. This is our growth profile for the next couple of years. This is, of the exception of Caribou, this is fully financed within our portfolio. Those will add ounces that came from different assets that we have. Eagle that I mentioned before, Odyssey from the Canadian Malartic properties. And the Eagle that just started producing in Yukon, ramping up to 2,000 ounces of gold per year. And they started in September, and they constructed under budget, and they start, I think, a month early that was planned. I mentioned that we like to return capital to shareholders. We paid a dividend since inception. We increased the dividend twice since we started, and we also buy back our share when we think our share price is undervalued. And we have returned over $300 million to our shareholders for the last 5 years. This is a chart of the gold price in Canadian and US dollar. So we really see a positive market sentiment in Canada, and we're well positioned to capture the value in the Canadian gold price. Summary of our balance sheets: $83 million in cash. We have available credit to finance other acquisition into the market. A portfolio investment of $281 million in different exploration company. And basic share outstanding, 142 million. And a dividend of 5 cents per share, which is 1.2% yields, or 3. So again, it's a peer-leading exposure to Canadian asset, very strong balance sheets, and we like to return value to shareholders by dividend and buying back shares, pretty high cash operating margin for the year to come. Thank you very much.